Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome back to the show.
Thanks, Jim. Good to be with you.
President Donald Trump's been in the news again, saying he doesn't like to see interest rates going up. It's unusual for a president to criticize the Fed chairman. What do you think about his criticism? Is it legit?
Well, it is definitely unusual for the president to do what he did, but then obviously we've got an unusual president. Here's how it worked. I guess it was on Thursday, CNBC, the American all news, all the time TV station about markets, had this interview they had done that was going to be released this morning, but they released chunks of it yesterday. And in that, Trump said he was not happy with the Federal Reserve raising interest rates. And, the way he thinks, he claims that rising rates are going to hurt the American economy after, all the hard work and heavy lifting he's done to get it going again. And also that a rising interest rates in the United States makes the dollar more attractive and, boosts the U.S. dollar against other currencies, making America less competitive. I mean, he doesn't hold back, right? I mean, we've learned that about him. So what immediately happened is the dollar had been at about the highest, when I say the dollar, the U.S. dollar index against a number of currencies had been at its highest level in just over a year, and it just dropped really sharply, really quickly as soon as the interview was leaked, I guess. And in a way, he's right. The higher interest rates in America, and just to give you an example, if you go to 2-year government paper, the United States pays you 3.25% more than Germany does. That is quite a disincentive to be long the euro and short the U.S. dollar. It is quite an inducement, to be a buyer of U.S. dollars and a seller of euros. So there is that. But, I do have a view that capital will come to America for safety, that is if the things are troublesome around the world, but also for opportunity. There are opportunities in America you can't get elsewhere in the world in terms of investments, and the capital does not come just for that incremental pickup in yield. So, and I should add that my long-term friend, Dr. Martin Murenbield, who has been a commentator on the gold market for the past 30 years, all over the world, he has long argued that the best way to correct the huge trade deficit that America has with the rest of the world is to drive down the value of the U.S. dollar, especially relative to Asian currencies. So, Trump's got some points there, but anyway, in the short term, that was the action following what he had to say yesterday. And then, of course, he reiterated again this morning with his another one or two of his famous tweets.
What about his tariffs? Aren't they going to hurt the economy when you got to pay more for everything from China and more for Canadian steel and aluminum?
Well, tariffs are, let me say this. I guess a few weeks ago I wrote in my blog, and I put a blog up at PolarFuturesGroup.com, usually every week. But I had written that a fellow that I follow in Asia, Christopher Wood, he's an analyst at CLSA, he said that politics have replaced the central banks as being the most important driver of world markets. And I thought about that, and I thought, yeah, I really agree with him. I mean, over the years, I really mean that. I've been saying the only thing that really matters is what central bank policy, certainly since, the great financial crisis. And I would narrow that down to say, I think that Trump is the epicenter of what politics is when you say politics is driving the markets. So, the trade wars, as we call it, are like a subset of the politics, and Trump threatening to escalate again, with 25% tariffs on autos, and then he says today we're all set to go with $500 billion worth of tariffs, or I should say it the other way around, tariffs on up to $500 billion worth of Chinese imports. So he's really upping his game, and that stresses markets to some degree, but it's interesting to see. Certainly seems to stress the currency markets much more than the stock market, which just kind of continues to chug higher. Does it? Of course, it damages the economy. Especially if it escalates, and that's what traders in all of the markets worry about.
We'll have more with Victor Adair right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with Victor Adair. Victor, the U.S. dollar was hitting one-year highs but fell back after Trump's comments. Do you think it's going to recover and go even higher?
Boy, Jim, that is truly the $64 question. I'd say yes, and that's a qualified yes. Like you pay your money and you take your chances kind of thing. I think the U.S. dollar has been going up because of what I call divergent policies by the different central banks. And even though Trump was saying he wasn't happy with the Fed raising interest rates, my view is that the new Fed, as I call it, under Chairman Powell, that is to differentiate this Fed from the Fed that was Greenspan, Bernanke, Yellen. This is a different guy running the show. He was in front of Congress on Wednesday and Thursday, basically saying, the American economy is doing fine, and unless something really weird happens, we're going to continue to gradually increase interest rates from the emergency low levels that they were at over a few years ago. And the economy is strengthening and is able to deal with rising interest rates. Whereas in other parts of the world, that's not the case. So, this 3.25% spread between two-year German paper and American paper acts as a magnet for capital. And also, from safety and opportunity. Safety means when things start to get a little shaky in other parts of the world and you want to go to a safe place to just, keep your money. One of the places we see that happening, for instance, is in Europe. When you look at the price relationship between the euro currency and the Swiss, when things get a little worrisome, like they did here a couple of months at the end of May when we had the Italian crisis, the Swiss franc jumped relative to the euro. So in the same way, when the capital will go to America, go to the center away from the periphery when things get risky, that's the old risk on, risk off bit. So I think those things stay in place, and this is probably just a bump in the road. But with Trump, you never know. He just might really ramp it up some more.
Well, we've been talking about trade wars and all the tariffs. Now we're hearing about currency wars again. Do you think they're linked?
Yes, absolutely. we have in some countries of the world, say like for instance Hong Kong or Saudi Arabia, two come to mind, that their currencies are pegged to the U.S. dollar. In other countries of the world, we have sort of call it a dirty float, or some other countries like Canada, it is pretty much a free float. The Bank of Canada lets the dollar go where it goes. Maybe in an extreme case, they'll come in and intervene in the markets, but currency wars would be in essence, and this is, what Trump is pointing out, saying that not only China, but also the EU have deliberately manipulated their currencies lower as to, let's say, mitigate the effects of the tariffs that he's putting in place. In other words, they're kind of doing a run around the end, on his defense, and he doesn't like that. And it certainly looks like, the Chinese yuan has fallen 8% or so from the April high, from the highs it had in April. That's about the time the U.S. dollar was making 3-year lows. But most of those gains have come since early June, when they were hit with the $34 billion in tariffs. And the currency has fallen off, as I say, 8% since then. So yeah, it looks like maybe the Chinese are deliberately running down the value of their currency to mitigate the effects of the tariff. And by the way, as the Chinese currency falls, so do almost all of the currencies throughout Asia, because those countries need to remain competitive with China. So you get this, say competitive currency devaluations, and at the end of the day, the short-term advantage somebody has goes to the other guy, and and wars end badly.
We'll have more with Victor Adair right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Yeah, the mother-in-law, 92 years old, came over to stay for a few days, and watching the news, she gets all upset. So I just put her on the balcony with a set of binoculars and told her to watch the ships and tell me what they did during the day.
Good idea.
And she left really happy.
Good idea. Good thinking.
Took her mind off everything. Welcome back. We're speaking with Victor Adair. Victor, some of the major commodity prices have taken a hit lately. Is this essentially a result of the trade worries?
The trade worries or trade war worries have definitely impacted commodities. The first one that comes to mind, soybeans. Bean prices have dropped about 20% or so in the last 6 weeks, and that was very specifically the Chinese put tariffs on American beans. Now, they're still going to buy beans, but they'll get them from Argentina or other places. But other markets, for instance, we've seen copper down 20% or so in a month, nickel down about 16%, zinc down more than 23%. Let me say there might be some other things like slowing global demand, and slowing global demand may be because, trade worries, I should say, are getting into the supply chain. I think there's certainly, in the case of copper, there has been what we would call unwinding of speculative positions. And I've always thought that, the last few years when I'm looking at copper, I think, what are we trading here? Are we trading, red metal, or are we trading Chinese monetary policy because of how copper is used in China in the financial markets? There seem to be, and there's been stories in the financial press about this, that there had been a massive speculator in copper in the Chinese markets, and over the years there have been a few in different countries. One in Japan comes to mind back in the mid-90s. that this guy had taken on a massive position in copper. Maybe he got bulled up on the story of how electric cars were going to use a lot of copper and whatnot. But anyway, it happens. Speculators get a big position. The market starts to go against them. They start to liquidate. Other traders smell blood and prices get hammered down. So I think there's been, and commodities have had kind of a run for the first part of this year. After a 5-year brutal bear market, right, from 2012 down to 16. And I think also a rising U.S. dollar has hurt commodity prices. But yeah, there's been weakness in commodity markets, and certainly part of it's been because of worries about trade wars.
Gold's dropped about $150 since April. Is this simply the flip side of a rising U.S. dollar?
Yes, short answer is yes. I mean, it's just the relative strength of the U.S. dollar over the years is the major other side of the gold price. Now, from time to time, certainly, real interest rates have a real bearing on the gold price. Geopolitical, events, something nasty happens someplace and the price of gold gets bid. But sort of through time and over time, the most important variable in determining the gold price is the relative strength of the U.S. dollar. And we have it here again. The U.S. dollar has been going up since April, and gold's been going down. I think sometimes, and I look at the gold chart, and believe me, over the years, I have traded gold for 45 years. A lot. Physical gold, finance, gold mining companies have been really around gold. And I wonder sometimes, I remember being in the basement of the Bank of Nova Scotia in the mall level, and there had to be 200 people lined up to buy gold as it was hitting $450 for the first time. And I thought, boy, is this ever a sign that this bull market is over, when all the little people are lined up to buy an ounce of gold? Well, of course, it doubled from there, virtually went up to another $850, but it went from about $450 to $850 and back to $450. I'm going to say it was about 3 months. And there's people of a certain age, that's like me, you're over 60, that remember when gold was so spectacular, such a spectacular bull market. I think the most spectacular bull market we've seen since then was in Bitcoin. Even greater than like a lot of the .com stocks. It just captured the public's imagination like nothing else. But people like my son, who were 31 years old, they weren't even born when gold was having its day in the sun. So sometimes I wonder if, gold is just not on the radar screen of a lot of people, and so there's not a lot of people lined up to buy it. I know we could talk about that all day, but yes, short term, the strength of the dollar hurt the price of gold the past couple of months.
Crude oil has been on a bit of a roller coaster right now. What do you see for the oil market?
Yeah, crude oil really, you think about it, we're $42 a barrel on WTI a little over a year ago, and we ran up to $75. That was what I call the collusion between the OPEC cartel and Russia to take supply off the market, and they got the price up. And then, we started seeing some choppiness in it as to whether or not, maybe at their next meeting they were going to agree to start pumping a little more, kind of put some more out on the market, take the sting out of the price rise. And then Trump comes along with what seemed to be much harsher than originally expected sanctions against Iran. He says, I don't want them to sell a barrel. So we'll go. Then that kind of goosed the market up again. And then I suppose what happened, we have a couple of things. One was Trump talking about he's going to get Saudi Arabia. He's going to phone them up and tell them, hey, you guys pump an extra couple of million barrels a day. I need the oil price down, so gasoline prices will be down going into the midterms. And then it seems almost, and if not, we'll let oil loose out of the petroleum reserve, the strategic reserve. There's just been a lot of, I think, turmoil in the oil market. Oh, and by the way, we have American production now over 11 million barrels a day. It's the highest ever in history. And the Russians are back to pumping about what they were, if not more, than they were before they agreed with OPEC to limit production. So the supply-demand balance in crude is so tight that just a couple of 100,000 barrels either way can knock the price around, and the market is also subject to very volatile outside political impact. So a lot of rock and roll in the crude oil market, and I honestly I haven't been trading it much lately.
The Canadian dollar was near 83 cents last September, and it's now around 75, 76 cents. Crude oil was around $60 last September and is now around 70. So it would seem that something else is driving the price of the Canadian dollar besides oil. What do you think's been hurting the buck?
Yeah, that's you're absolutely right. The correlation between crude and Canada sometimes runs pretty tight, and other times it's like they don't even know each other. I'd say in no particular order of sequence or priority. Certainly, Canada's been troubled by NAFTA worries. Let's call it, our own version of the trade wars. I mean, Trump's said some very nasty things about NAFTA, and NAFTA is very important to Canada in terms of, we sell most of our exports to the United States. So that's been there. There has been, I think, my sense is that the Bank of Canada, in kind of a paternalistic way, sort of is happy to see the Canadian maybe a little softer, makes it a little easier for Canadians to compete with the Americans. I think there's some of that. Certainly the market thinks or sees, prices in a difference between the central bank policy we have in Canada and the one they have in the United States. To put it in this sense, the Americans are raising rates and appear set to keep doing it, whereas Canada has kind of taken baby steps to raise rates. I mean, we have raised rates, but, it always is they call it a dovish raise. So I think there's that. And then, the big picture, I suppose, is that when the U.S. dollar is rising against most currencies of the world, it's rising against the Canadian dollar. So, that's probably the big thing that's been causing Canada to go down. And, here's the thing. If we didn't have a floating currency, if we had our currency pegged, say, at $1 to the U.S., like an equal exchange, one Canadian dollar for one U.S. dollar, our unemployment rate would probably be 12%. So when I say the Bank of Canada kind of likes to see the Canadian dollar down, that's my view. They don't come out and say that. That's one of the reasons for it. That's why you have a floating currency, that the floating currency becomes a shock absorber. And when America is kind of strong like that, and the Canadian dollar is a little weaker, it keeps our employment stronger than it would be otherwise.
Well, I'm sure Greece is wishing that they had kept their lira or drachma.
The drachma.
The drachma.
And absolutely right. When we're having the Greek crisis, the thought was if they still had the drachma, their economy would be doing fine because all the rich Germans and Northern Europeans would be flocking down to Greece to spend their money on holiday. The single currency in Europe has been good for some countries and not good for others. But before they had that single currency, most of the others, I call them the Mediterranean countries, regularly devalued their currencies against the Deutsche Mark, and that includes France, by the way. France devalued against Deutsche Mark, so that they could maintain their lifestyle and compete with the Germans. Now that they've got one common currency, they can't do that anymore, and that's kind of the root of the problems that led to the Italian existential crisis we had at the end of May.
Victor, thank you so much for chatting with us.
Jim, it's always a pleasure. I look forward to talking with you again about another month or so.
We've been speaking with Victor Adair, co-founder of the Polar Futures Group. His website, polarfuturesgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.